Okay, let's unpack this. Forget the old model of massive power plants miles away. Today, we're diving into a shift that's bringing energy generation much closer to where you actually use it. This is the world of distributed energy generation, or DEG.
That's right. It's a fundamental change, really, in how we think about power moving towards decentralized, sort of localized sources. Think rooftop solar, small wind systems, other technologies popping up closer to consumption points.
And we've got a great source guiding this deep dive, a detailed market research report focused specifically on the global DEG market right now in 2025.
Exactly. It's a snapshot of the market's current state, but crucially, it looks ahead. Gives us insights into where it's heading, the scale of its growth, and, the forces shaping its future.
So our mission today is to slice through the data and charts from this report. We want to understand what's truly driving this massive shift, just how big this market is set to become, which parts of the world are leading or catching up fastest, the key technologies making it happen, and importantly, the challenges it's facing. This is your quick, insightful shortcut to being genuinely well-informed on the distributed energy generation landscape.
Okay, let's explore what the report lays out.
First off, let's just level set. What is distributed energy generation at its core?
Well, basically, it's about taking energy production and spreading it out. Instead of relying on a few huge, centralized plants, DEG utilizes multiple smaller sources. We're talking technologies like solar PV, wind, combined heat and power fuel cells located near buildings, communities, or industrial sites that will actually use the power.
And the report touches on why this approach is gaining traction, right? What are the key benefits highlighted?
Yeah, a major benefit discussed is reducing transmission losses. When electricity travels long distances from a big plant, you lose a significant amount along the way. Generating power locally avoids a lot of that, boosting overall efficiency. It also enhances reliability and energy security, which is particularly valuable in places where the central grid might be, unstable, prone to outages, or simply not easily accessible.
So it's more efficient and makes your power supply more robust. Got it. Now let's talk scale. How big is this market right now in 2025, according to the numbers in the report?
Okay, the global market size for distributed energy generation in 2025,
Right.
it's pegged at USD 386,450 million.
Okay, that's over $386 billion already. That's not a small market by any means.
No, it's substantial. But here's where the report gets really interesting. It forecasts truly remarkable growth. By 2033, so in just 8 years, the market is projected to expand dramatically. It's expected to reach over $1 trillion specifically, USD 1,087,004.66 million.
Wow, over $1 trillion. That kind of growth in less than a decade is...
Yeah, astonishing. Absolutely. And the report calculates the compound annual growth rate, the CAGR, from 2025 to 2033 at 13.80%. That's a very strong rate, reflecting rapid investment and adoption globally.
So clearly something powerful is fueling that sort of explosion. What are the major drivers the report identifies behind this growth?
Well, the number one driver highlighted is the accelerating adoption of renewable energy sources. This is fundamentally tied to, global climate goals and the push to reduce carbon emissions. Governments worldwide are playing a huge role here, implementing supportive policies and offering significant incentives, think tax credits, subsidies specifically designed to encourage decentralized renewable systems.
Right. And the report even gives a tangible example of this policy investment in action, doesn't it?
It does, yeah. It points to Cairn Oil and Gas announcing plans to power its Mangala pipeline entirely with solar by 2025, which involves installing rooftop solar PVs across their facilities. That's a clear instance of a major company making a significant move towards distributed renewables, probably driven by these factors.
Okay. Beyond the clean energy push, what else is really driving demand for DEG?
There's also the increasing demand for reliable, decentralized power. Like we mentioned, DEG offers a crucial alternative to the traditional grid model. It helps bypass those transmission losses and, critically, enhances energy security. This is vital for industries, critical infrastructure, or even just homeowners who want to be less vulnerable to grid failures or instability. People want more control and resilience in their power supply.
It makes perfect sense. I mean, if the main grid goes down, having your own local power source can be a game changer.
Exactly. And the report also notes how advancements in related technologies, particularly energy storage solutions like batteries, are making DEG systems more viable and appealing. Being able to store solar or wind power and use it when the sun isn't shining or the wind isn't blowing, that's essential for reliability.
Right. So powerful drivers like the renewable energy transition and the need for greater reliability are really propelling this market forward. But what's standing in the way? What are the main hurdles or restraints the report points to?
The primary barrier identified is the high initial installation and maintenance costs. Getting a distributed system up and running, whether it's solar, wind, or fuel cells, it requires a substantial upfront investment. That can be a significant deterrent, especially for, say, smaller businesses or individual consumers.
And it's not just the cost to put it in, is it?
No, the report also points out the ongoing costs, things like regular maintenance, and for many systems, the eventual need to replace components like batteries and energy storage systems. That adds to the total lifetime expenditure. These costs can be a significant factor limiting wider adoption, particularly in more price-sensitive markets or regions.
Yeah, high costs are definitely a challenge to overcome. Shifting gears a bit, looking ahead, what are some of the major trends shaping the future of this DEG market, according to the report?
A significant trend mentioned is the growing adoption of microgrids.
Ah, microgrids. Could you quickly clarify what they are for anyone maybe new to the term?
Sure. Think of a microgrid as a sort of localized energy network. It can operate independently from the main large-scale grid, or it can connect to it. It might power a specific building, a military base, a university campus, or even a small community.
And why are these becoming so popular? What's the draw?
The report emphasizes their role in enhancing energy resilience for critical facilities where uninterrupted power is absolutely non-negotiable, or for remote areas. Microgrids provide a robust, self-sufficient power supply that isn't reliant on the potentially fragile main grid.
Interesting. Energy security seems to be a recurring theme here.
Mhm.
What about technology trends in terms of, like, managing these systems?
Well, we're seeing increasing integration of IoT, Internet of Things, and AI, artificial intelligence technologies. The report details how these are being leveraged for optimized energy management within DEG systems.
How does that work in practice? It sounds quite advanced.
It is, yeah. IoT sensors are collecting vast amounts of real-time data, everything from how much energy is being generated and consumed to the performance of specific equipment, even local weather conditions. AI algorithms then crunch this data to predict maintenance needs, optimize energy storage and release, balance loads, and generally make the system run as efficiently as possible. It allows for smarter, more responsive, and more predictive energy systems.
So using data and intelligence to make these distributed systems operate better. The report gives a couple of interesting examples related to this, doesn't it?
Yes, it mentions Israel testing an AI-powered floating solar system, apparently designed to track the sun for maximum generation efficiency. It also briefly notes the release of the NREL DGen-TM model, which is an example of the sophisticated modeling tools being developed, using data and computational power to analyze and plan distributed generation deployments.
That's fascinating to see how cutting-edge tech is being applied here. Now, let's look at the technologies themselves. How is the market segmented by technology type?
Okay, the report breaks down the market into combined heat and power, CHP, solar photovoltaic, PV, wind turbines, and fuel cells.
And among those, which technology holds the biggest share in 2025? Which one's leading right now?
According to the report, solar PV currently dominates the market share, which isn't really surprising given its widespread adoption globally, the dramatic reduction in costs over the past decade, and, continuous improvements in efficiency.
Okay, so solar is the biggest piece of the pie. What about the one growing the fastest? Any standouts there?
That would be combined heat and power, or CHP.
CHP is the fastest growing segment. Huh. What makes it stand out? Why is it growing so quickly?
Its key advantage is efficiency. CHP systems generate both electricity and useful heat simultaneously from a single fuel source. This would be natural gas, but increasingly biofuels or other sources are being used. By capturing and utilizing the heat that would otherwise be wasted in traditional power generation, CHP systems achieve much higher overall energy efficiency. So for commercial and industrial users who need both power and heat, this translates directly into lower energy costs and reduced emissions. That makes it a very attractive, fast-growing option.
Right, that efficiency angle really drives that growth story.
Mm.
Makes sense. Moving from technology to geography, how does the market break down regionally according to the report's 2025 figures?
Okay, region-wise, in 2025, North America holds the largest market share. It accounts for over 40% of the global revenue. Europe is the second largest region, just over 30%. The Asia-Pacific region is around 23%, South America is over 5%, the Middle East is around 2%, and Africa is about 1%.
North America is leading the pack in 2025. Why is it so dominant, according to the analysis? What's driving that?
The report attributes North America's leadership to a strong commitment to adopting renewable energy, significant government support through favorable policies and incentives, and well-developed advanced energy infrastructure, including things like smart grids and microgrids. Within North America, the United States holds the largest country share.
Gotcha. And where's the most explosive growth happening? Which region is really taking off?
That's the Asia-Pacific region. It's pegged as the fastest-growing segment, with a projected CAGR of 15.8%. This rapid expansion is fueled by factors like, well, rapid urbanization, significant industrialization, and just a soaring overall energy demand across the region.
Which countries are really powering that APAC growth?
Major markets driving this are China, India, and Japan. The report also specifically highlights that Southeast Asia is experiencing a particularly high growth rate within the region. And it's worth noting, while their current share is smaller, regions like South America, the Middle East, and Africa also show positive growth rates in the report. It indicates this is a truly global trend, just maybe at different stages of maturity in different places.
So a clear picture emerges of leading and fast-growing regions. What about the companies operating in this space? What's the competitive landscape like?
The report describes the market as highly competitive, actually, featuring a diverse mix of companies.
And what are these leading companies focusing their efforts on? What are their strategies?
The source indicates a strong focus on improving energy efficiency in their offerings, integrating those advanced technologies like AI and IoT we discussed, and significantly expanding their portfolios, particularly within renewable DEG solutions like solar, wind, and biomass.
Can you give us a sense of the types of companies mentioned as prominent players? Just some examples?
Sure, the report lists names you'd likely recognize from both traditional energy and industrial sectors, alongside specialists in renewables. Companies mentioned include Siemens, General Electric, Schneider Electric, Vestas Wind Systems, Caterpillar, and Rolls-Royce, among others.
Okay, that gives a good snapshot of the major players navigating this market. Finally, the report also looks at external factors impacting the market around 2025. It specifically mentions the impact of tariffs. What does the source say about that?
Right. The report includes a section discussing tariffs introduced by the U.S. government around that time. It details aggressive tariffs, ranging from 10% to 46%, specifically targeting components crucial for the energy sector supply chain.
What kind of components were hit by those tariffs?
The source points to things like rare earth metals, solar panels, wind turbine parts, and lithium, all essential inputs for distributed and clean energy technologies. It notes the significantly escalated trade tensions, particularly with China, which, as you know, has been a central player in global supply chains for these goods.
And according to the report, what was the impact of these tariffs on the DEG market specifically?
The report states these tariffs led directly to rising material costs for projects, caused supply bottlenecks, and resulted in delays in the deployment of new energy projects. It provides examples, noting that solar and wind projects specifically faced increased costs, estimated at 10% to 30% higher, directly because of the tariffs.
So a pretty direct negative impact on project costs and timelines. How did the industry respond to this according to the report? What did companies do?
Well, the source details that companies began actively exploring alternative sourcing options. This involved looking beyond traditional suppliers like China, maybe considering regions in Southeast Asia or Latin America, and also investing in expanding domestic production capabilities. They focused on diversifying their supplier base and leveraging data and AI tools to try and optimize their supply chains, basically to navigate these trade disruptions and increase costs.
It sounds like companies are being forced to adapt their strategies pretty significantly to mitigate the impact of those trade policies. And it's important to remember, for you listening, we're just relaying what this report describes as the market impact of those specific policies. We're not offering any commentary on the policies themselves.
Exactly. We're presenting the analysis directly from the market research report's perspective on its effects at that time.
Okay, that's a truly comprehensive look at the distributed energy generation market based on the information in this 2025 report.
Yeah, we've gone from defining what DEG is and why it's beneficial through the impressive scale and projected, trillion-dollar growth of the market. The core drivers pushing it forward, like renewables and reliability, the significant hurdle of high initial costs, exciting trends like microgrids and the integration of AI, the dominance of solar but the rapid rise of CHP, the distinct regional dynamics led by North America and APAC, the competitive environment, and even the impact of external factors like those trade tariffs.
So you now have a clear, concise understanding of a complex and rapidly evolving market pulled directly from the source material. This deep dive provides you with the essential insights quickly, giving you a strong grasp of the DEG landscape.
It's clear this is a market undergoing rapid transformation, driven by both technological innovation and global energy priorities, while also navigating some significant economic and logistical challenges.
So thinking about this massive shift towards decentralized power generation, power being made closer to home, closer to factories, closer to communities, how might this fundamentally change the power you have? Not just over your electricity bill, perhaps, but your relationship with energy itself. It's a fundamental question about control and resilience in our future energy landscape, and definitely something worth considering as this market continues its astonishing growth.